Morning, fifthers. Okay, we're getting near the end of this topic. Now, the last few bits, don't skim on them because there's quite a lot of marks got for these parts as well. So, what we're going to do this week, we're going to look at only the questions with part B that is looking from a debenture holder's point of view or from where you're going to get a new loan. Someone's came to you and you're the bank manager. The bank manager is being asking your advice, should they give you a new loan or not. Now, I'm going to be basing these notes on the 2017 exam question. So when you're doing part B, you're going to do profitability. Now, you've already done this for 2017 and you always do this ratio, return on capital employed. You're going to do liquidity and we always do the asset test ratio. You're going to do dividend policy. Because it's the debenture holder's point of view, we do DPS, dividend yield and dividend cover. Number 4, we're going to do gearing and interest cover. We always do the original ones, which is what I've shown you, but you're going to have to redo these now if they're talking about giving you a new loan and see how they affect the ratios. So I'm going to be doing that with you as well. You're going to have to do a section on security. The good thing about security is only talking, I'm going to talk you through that now. You're going to have to do a section on the purpose of the loan. You're going to have to look at the sector the business is actually in, and you're going to look at investments. Okay, I'm going to look at security and we're looking at it 2017 question. Now, the good news is you're going to write these 7 things down all the time. So number 1, you write down the total value of fixed assets, and that's in your balance sheet. You've 150, 580, and you've 100 investments, so you've 830,000. You just write that down. So you're giving them advice, so you're just telling them the total value of all the fixed assets that you have, which are the tangible, the intangible, and the financial, add up to 830,000. Then you're going to say the intangible assets are 150. We'd always show how much they are because they might actually be worthless. Now, number 3, you're saying to the bank manager, you should question the depreciation policy to ascertain the real value of fixed assets. Now that line has to be learned off. And all we're really saying there is, in this question, they have tangible fixed assets of 580, but there's no mention of depreciation. So we're just saying to the bank manager, you should go look for further information about their depreciation policy. Okay. Then 200,000, if you look at the question, they have debentures already of 200,000. So what I'm saying there is they already have 200,000 of their fixed assets are already secured to existing debentures. So you can't use them because they're already used for that existing loan. So the value of tangible fixed assets, the real assets, the ones that are valuable, like your land, your buildings, your equipment, your machinery, are valued at 580. So they're really the only ones that you can use as security. So we're saying if you take into account the loan that you already have, and these are your real assets, you have 380,000 left as security for the new loan. Now the new loan in this question, you're being asked to give a loan of 300,000, the security of 380. So you just say there's adequate security for the loan.